Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, June 16th, 2023. It's now 5:30 a.m. Central Time. We start off in the daily Qs chart in DeMark, looking back to the October 2022 low. And the Qs chart for the daily study shows every combo and sequential level that DeMark offers. You can see them here. The only one that's missing is combo cluster, which is also in yellow, along with the sequential cluster. And I have all of those switched on for the buy levels down here. You can see them all, and then switched off for the sell levels up there to show only the sell risk levels. And you can see, despite all of these 13s down here, that not one of them were qualified and confirmed. They were all disqualified before the price took off to the races to the upside. So the buy and sell risk levels are just like sell and buy TDSTs, where they can become qualified and confirmed for more potential either upside, or in this case down here it would have been downside. So none of them were qualified and confirmed down here. Same thing with the sell TDST level. Nothing was qualified there, but then we had the buy TDST qualified and confirmed, and that was really the start of this major uptrend, which has turned parabolic. And I take back what I said earlier about there not being a combo cluster. There was one up here, so when we get to the sell risk levels, we will focus on combo cluster and the sequential cluster. I'll zoom into the current area now, and we'll keep in mind that none of these buy risk levels were qualified or confirmed. Same thing with the sell TDST levels. So I have all sell countdown completions switched off except for regular sequential, the sequential cluster, the regular strict combo version, and then for yesterday's bar on the 15th, I had to leave on the phantom sequential, the regular sequential, and the variable sequential, so that I can create the sell risk level here with this line segment at 379.57, as we won't get an official sell risk level until today's completion bar for the 16th, so that it can have something to compare to. So I put an ad hoc line segment in here to designate that level. And the main reason for DeMark sell countdown completions is to designate exhaustion of trend, and the last buyer buying the last share before a downturn. And we don't get much of a downturn these days. You can see this combo and sequential cluster here had a small downdraft, and then it was back to the races to the upside. So now us traders and investors are living on sell risk levels becoming qualified and confirmed. You can see several of them here, and they won't happen until there's a downdraft and then a continuation of upside movement. So you can see here there was an up close, followed by a down close, followed by an up close above the levels in question. All of these sell risk levels, and then the next day it opened higher than the close the day before and ticked higher than the true high of all 4 bars in the sequence. And when that happened on this bar, qualified and confirmed all of these sell risk levels, and that's an indication of going beyond the 13s being designated as exhaustion of trend and continuation of more upside. So there has been a very strong uptrend with the AI frenzy, and you can see right after June 7th it's been nothing but up closes. So now we're waiting for a downdraft similar to back here when all of these became qualified and confirmed for this area here and all of these levels. And you can see in the pre-market for the US Tech 100 or the Qs at 5:50 a.m. on the 16th Central Time that we're having a slight uptick in price. So until otherwise qualified and confirmed, this sell risk level, which designates the phantom sequential, the regular sequential, and the variable sequential, and it becomes qualified and confirmed, this will be resistance level here for the Qs for today. And one scenario for this updraft and possible downdraft to get these levels qualified and confirmed. And if that happens, then it's more than likely that these levels become qualified and confirmed eventually. And that level is right here. But I think these are the ones that we will be focusing on in the immediate future here. And this level as resistance. And there's major support at the sell TDST at this level here. And there could be another sell risk level from this combo cluster. It's on a 12 now, and it could print a 13 for today. And that will give us yet another sell risk level, more than likely above this one or very close to it, from this phantom sequential and the variable up here. And if that scenario plays out and this gets the 13 and then qualified and confirmed on these sell risk levels, then we're going to have to wait for the sequential cluster to print the 13. And one would think if this scenario plays out where everything becomes qualified and confirmed and we print the sequential cluster 13 cell countdown, and one would think that would be exhaustion of trend when that happens. And one word for yesterday's price action on the 15th. Wow, that was really incredible. It actually pushed up the NYAD line here that we've been looking at for the negative divergence to price. So this negative divergence is negated. However, this is as lame as it can get. You would expect with this price action down here and this red arrow for the NYA that the NYAD price would be a lot higher than that. So we still have the negative divergence in the NYA to SPX ratio, and the ratio adjusted McClellan breadth oscillator is as lame as it can be also. So while I do not doubt more upside eventually and sooner rather than later, a great deal of skepticism on the continuation of this major uptrend is the order of the day. So just be careful of buying around this area until we get that downdraft and some of those sell risk levels in DeMark qualified and confirmed. So no official bull market yet as per my criteria. Please see the special video of how to call a bull market for my criteria. We'll zoom into this current area now. So you can see currently that the large cap S&P 500 in the top window, and we're looking over in the thumbnail, hit 10%, but it needs to be over 10% to call a bull market, so we could stop right there. However, back on the 7th, the mid cap in the middle window, so the S&P 400 mid cap did make it above 10. And it's strange that at the end of the day, similar to the S&P 500, the mid cap ended at 10 that day. And now that I look back, it was over 10, so we'll have to keep a closer watch to see if this gets readjusted to the upside for today. But anyway, on the 7th, the mid cap went over 10%, so let's go look at the moving averages now. So here is the 20-day simple moving average for the S&P 1500. We'll scroll over to the current area. And on the 7th, all three indexes of the S&P 1500 were hitting on all cylinders and above the 80 level. So let's go to the 50-day. And here's the 50-day simple moving average for all three indexes of the S&P 1500. I'll scroll over to the current area now. And here's the 7th, and no indexes of the S&P 1500 were above the 80 level, so we can stop there. No bull market. Same thing for yesterday's level on the 15th. If that does become adjusted to the upside for the percentage high-low of the S&P 500 large cap, there's no bull market anyway, as the 50 has all three below 80. The S&P 500 support and resistance levels big board chart shows the gray areas at the upper Stark band and the daily high channel 3 along with the pivot point. Price in the pre-market hours for the S&P 500 at 6:46 a.m. Central Time on the 16th is 44.30. So to the downside is the 4,300 level, the daily Bollinger Band upper band, and S1. So to start the day above the daily Bollinger Band and the upper Stark band is really pushing the envelope of tolerance to the upside. And it's needless to say, but we'll mention it anyway, that both the S&P 500 daily AD line and the NASDAQ 100 daily AD lines are above their 21 EMA signal lines respectively. And since I've last made this big board public, we have now moved up to the 4,400 zone. So things are definitely looking up. And the ROC 1 ended up closing above its positive volatility line, which is positive 1.00. There was a close of 1.22. And the ATR2 is above its low volatility zone, which is anything below 50 positive. It closed at 61.03, is pointed up. And look at the PPO extreme, 8.95% above zero. So that puts it in between the PPO level 2 and PPO level 3. It needs to get up to 10.04, so there's plenty of room to run around in there, just like there was between the PPO level 4 and PPO level 3, and it certainly did run to the upside and got above that. So yeah, that's really incredible too. It was a time not too long ago where it didn't seem like it was ever get above those levels there. And the New York traditional McClellan breadth oscillator to get back to zero would require 2,252 decliners over advancers to get back to zero. And also, notably, my projection for D wave up 3, which is based on closes, was tagged some time ago. And then we opened up the DeMark level, which is based on high lows, and that was nailed too. So that does happen sometimes at the index level, but has not happened for the S&P 500 literally in years. Have a great day.